when you're trading the markets, it's really important that you, when you're trading with charts, that you look at multiple timeframes and multiple trends, because this then puts the odds on your side. So I'm going to give you a little presentation here. We're going to set the charts up as well and show you how to set those timeframes up and what combination timeframes to look at on this lesson. Don't forget to subscribe to the channel, guys. We're going to be doing plenty of these lessons for you so you can understand and become a good trader. So let's look at confluence between timeframes. Trading opportunities that occur on multiple timeframes present higher odds of success. Have you heard the saying, trade with the trend? This is called confluence between timeframes or convergence with persistence. So an example here is you find an uptrend on the daily chart and a pullback in an uptrend on the 30 or say 60-minute time frame. I like to use the 60-minute chart, followed by a pullback occurring on a 5-minute chart. This is a prime example of confluence or convergence to persistence. So let's go to the next slide here. You always need at least 2 time frames to start with. Now, when you're brand new to trading, this might confuse you. Looking at 2 charts, well, it's the same chart, same market, but 2 different time frames. Okay, you're going to get better at this. The more you practice this, you're going to be able to look at 6 different time frames if you want to. But look, no more than 3. 3 is better than 2. So if you start with 1 chart, maybe a daily time frame, look to see where the trends are going, identify support and resistance and trends, uptrends and downtrends, then add another time frame. But let's look at the different time frames used here. So for core trading and position trading, long-term investment type trading, monthly, weekly, daily, that's 3 time frames. So the monthly is certainly the overall trend, and trends take longer to change on a monthly chart than they would do on a daily time frame because there's less candlesticks. And then there's swing trading, which is very popular. You see it all the time. We teach swing trading. We do swing trading every single week, every Monday night. We're looking for new trades on our scan club every Monday night, and that's called swing trading. It's done in the evening time, so everyone can take their time, place those trades, set those up for the rest of the week, and those trades are probably going to last several weeks. Okay, so maybe look at the weekly chart, the daily time frame, the 60-minute chart, and maybe even 5-minute if you want to. But look, if you're working, you know, and you can't get to the charts all the time, then of course the 5-minute is not going to be the one for you, or the 60-minute. It doesn't matter. Use a core time frame like the weekly. We can call it an anchor chart or a bias time frame, and then set the daily as your entry. So you're always going to have a bias time frame, get an entry time frame, which is going to be a smaller time frame. Intraday trading, you're going to use the daily, 60-minute, and maybe a 15-minute or 5-minute of entry. So if the daily is in an uptrend, then the 60-minute then pulls back, okay, goes down. Then you might want to look for a signal on the 5-minute chart to get long. Scalping is all about quick movements, in and out, quick trades on a chart. Maybe a 10-minute, 5-minute, 3-minute, or even a 1-minute. I know people go down to 10-second charts. Look, other combinations exist, but these are the main time frames for confluence. Okay, you can mix them up, add one, take one off, to suit your lifestyle and your ability to where you are as a trader at this moment. Let's go to the charts, open the charts up, and then set the actual time frames up. Let's do that. Right, so what I've done here, I've literally just built one time frame, well, one chart, and this is the 1 hour of Bitcoin. So just use any time frame or any market, which I'm doing here. Now, look, I'm going to go to the weekly chart. Start with the weekly. All right, so I'm going to create a weekly chart. I'm happy with this weekly chart. Here's one I've made earlier, and you know, it's got all the indicators and systems on that I need. Now I need to create another chart to go alongside this, so I'm just going to duplicate that chart. On my chart platform, it allows me just to do it down below. So now I've got 2 time frames. This is 2 time frame analysis. Now make sure you scale it, and a lot of chart platforms will have a button where you can actually scale it. It will scale it for you. If you want a 3-window view, just click on the 3-window view, look around your chart platform for that. So I'm going to do a 3-window, 3 charting view. I'm going to duplicate this one as well. Now I'm going to drag it over to the right hand side here. Okay, so now we've got 3 charts, but they've all got the same market, but they've all got the same time frame. So I'm going to change this one to a 5-minute chart. I'm going to change this one to a 60-minute chart. Okay, 1 hour. I'm going to change this time frame to a daily time frame. Right there. All right. So now I've got 3 time frame window here. And on this particular chart, you can see, so I like my charts to be the bigger time frame on the left, medium time frame in the middle, and the smaller time frame on the right hand side. You might want to flip it around, the bigger time frame on the right, middle, and the smaller time frame on the left. Entirely up to you how you like to view your charts here. All right, you might want to go from left to right or right to left. Start with the bigger time frame all the time. You can see we're in an uptrend in this particular market. Don't worry that it's Bitcoin. You can see we've had buy signals and buy signals. So every time you get a green buy signal, you want to be long. Why? Because the bigger time frame is green and up. You see here we've got a 5-minute red. So we're out of sync with the bigger time frame. Does that make sense? We're out of sync. If we were doing 5-minute greens, okay, that would be in sync with the bigger time frame. And most definitely, if you can find markets that are absolutely in sync together, and what you could do, guys, and what we do very much here at Trading College is we score them. Okay, so the bigger time frame will get 1 point if it's green and up. The medium time frame will get another point if it's green and up and it's firing a signal, and then the smaller time frame will get another point if it's green and up. If it's only given us 1 point, which it is here, then we don't take the trade. We wait for then the smaller time frames to turn back to green. Then we're in line. We've got that confluence, that lovely confluence in with the bigger time frame, and that will save you so much pain going down the line if you're a new trader, because you're trading with momentum and you're trading in the direction of a trend. Okay, and it's those people, and I did this when I first started, I'm counter trend trading when the bigger time frame is pushing up, and it's something that you learn when you get into trading. And hopefully I can teach you that right now and you can understand that now, so it saves you pain in the future. All right, what I'd want to do is wait for this to come back in line, and most definitely this to come back in line as well. You need a scoring system that's really simple to follow. All right, hope it helps. Don't forget to subscribe to the channel. I've got some cracking videos, training videos for you, a bit more practical stuff like this where we do a bit of a slide and talk about the actual lesson, and then we go into the charts and actually discuss it ourselves, all right, in a live trading environment. You see Bitcoin selling off here. All right, guys, speak to you soon. Take care. Have a great rest of the trading day.